Hey, good afternoon, everybody. This is Dennis Wilborn. I want to welcome you to How to Make Money Trading Stocks, Options, and ETFs. This is a Friday presentation we do each Friday. It's a free presentation that we give to anybody who's interested in the market. And we want to highlight a couple of things today. But if you are joining us via Facebook, or let's say you're watching this video on YouTube, please do me a favor. Share it with friends who may be interested in trading. And then secondly, if you like the content, please give us a thumbs up. That's how they basically judge individual pages on Facebook and also YouTube and all that type of stuff. So yeah, I appreciate a thumbs up. If you have any comments, please leave the comments there, or you can always email me. So hey, let's get into today's session. This has been a shortened week, but let's get into today's session right this moment. So again, welcome to the How to Make Money Trading Stocks, Options, and ETFs. I'm Dennis Wilborn. I am the founder of Active Trend Trading. Remember that all your materials are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal performance. Excuse me just a second, please. There we go. Let's start over again. Okay. I want to remind everybody that your job as a trader is to basically wait for the best opportunities. Money is made stalking and sitting, not actively trying to force a trade in on a weekly, on a regular basis, or even trying to get a trade every day. We are not about day trading. The objective of the session today is just basically timely, actionable intel at the end of each week to clarify, simplify your market decisions so that wealth can be multiplied. I'm looking at the uptrend. The uptrend has continued. However, it's starting to run into some pretty strong headwind as we approach levels of resistance. There, look next week for folks to potentially start taking some profits out of the table, off the table. And this is a very good thing, because when they take their profits off the table, that will basically give us a pullback that we've been needing to institute a position on some of the indexes. So we'll stand by for that. Here's where we're sitting as of 9 o'clock this morning. The indexes are up. However, they're still down from the highs from last year. And we're just kind of nipping away at our own profit and loss statement going into the year. Just remember, as we do our trading, we want to be strategic in what we're doing. If you're flying one of these F-18s, you don't take off off of this deck down here without having a strategic plan of how you want to approach your trading. So let's take a look at some of the charts to see what the market is getting ready to provide us. Okay, I'm going to take a look at both the daily and the intraday here, or better yet, I will take a look at the 3 level. There we go. Okay, I'll come back to this Netflix trade here, or Netflix opportunity here shortly, but let's take a look at S&P. Spiders. As we see, spiders. The S&P is running up against resistance at the 2,800 level, 2,800 to 2,810, which is reflected here by the spider level of about 280 up to 281. Price action has, kind of topped out here, so we may be looking at a double top action on the momentum. However, momentum has not rolled over. As we see what's gone on, and we've got these little micro pullbacks, we get this huge move up out of here at the beginning of the year. And so as we were converting over to one of our new services, it's always kind of frustrating. I was flying on both of these, during this time frame when we were getting these congestion and the move higher. Then from there on, straight move up, very little opportunity to jump on the additional trade. So now we're waiting for the next pullback. The next pullback should be down to about the 20-day moving average. And also, it could be a little bit deeper. We'll lay a fib on here over the weekend to find out, okay, where is the 30, 50, and 60% retracement? Approximately to say, okay, this is where a healthy retracement would be. And that's where we'd be looking at possible opportunities going into the near term. Normally for the markets, the indexes, they're a little bit soft in the January, February, March timeframe. That has not been the case this year so far, as we see spiders pushing up. But it's one of those situations where this is not the time to get long. We want to wait till we're at a stronger level of support, because basically the reward on this move is up to 281. Well, the risk is probably down at least to the 20-day moving average, which is down at 272. Let's take a look at the NASDAQ. The Qs. Again, NASDAQ. Now, NASDAQ itself, we are at a level of resistance up in here at the 173 level. That has been a past level. So, as you can see here, you've got this nice zone. This zone here goes from 175, just a little bit above 175, to the highs for this week. So there's a resistance zone where, again, we would anticipate prices perhaps softening at that point, rolling over, pulling back into support, then ricocheting potentially higher from there. As we see here, TSI is showing kind of a double top type feature, a little bit of negative divergence. Market forecast is just driving sideways, is not giving us any clue that, hey, momentum is coming out in a big way. We'll wait and see what transpires here. We had a good sell-off yesterday, but a sell-off that just, these little micro things, very challenging to how do you want to trade it? You want to trade it from here to here, where it's right up against a resistance. That's a decision. Now, if you're an option trader, you can do that and pick up $2 or $3 worth of movement. And so that's one of the options that you have. I don't particularly like to trade that way. I would rather get these more sustained moves. IWM. IWM has been the strongest of the indexes so far. As you can see, it has blown out past, or it's above its moving averages to a greater extent. It is right at the 200-day moving average and looks like it's trying to peek its head above it. However, it is very extended, very oversold, overbought, and we'd anticipate somewhere between like the 159 up to the 160.5 level. That's where we'd run into potential resistance that could potentially, the ceiling that would slap the prices back down. We'll wait and see what transpires with that. As you can see, weekly TSI heading straight up, daily TSI peaking, and then the intraday on a 30-minute chart is also peaking. Looks like it's running into its own resistance on an intraday chart, and could be pulling back down here. If you're watching these, pay attention to the half-hour or hourly chart for pullbacks into the moving averages. This is this one here is the 50-period moving average. I want to say. No, it's the 34. Excuse me. This upper one's the 34. The lower one's the 50-period moving average. They work. It's really interesting how the moving averages that we've chosen within, we didn't choose by accident, how we utilize with the active trend trading system. Just pay attention to those, because that can give us some really nice setups. Unfortunately, these breakaway gaps right there make it a little more challenging. So that's what's going on with the indexes. They get extended away from their 20-period moving average, 20 or 21, depending on which one you prefer to use. The greater the probability that we will get a reversion to the mean. And we're basically in that situation right now as we speak. So let's take a look at a couple of other ones. Let's take a look at gold real quick. Gold's always something, kind of fun to watch. As we can see, weekly chart on gold looks like it's, not quite a shooting star, but definitely a spinning top doji as gold has reached up into this resistance zone from 2018. So what we anticipate, it also is well oversold on a weekly basis. So a pullback, down into the 122, down to 120 area would not be a surprise. USO oil, or the ETF for oil. Also, it is in the beginning of a move up. Okay, if we get a situation where we get the Chinese trade deal goes without a hitch, we'll see if that happens or not. Or it appears as if some of the global banks may be softening, and the U.S. Fed is basically, in their statement that came out this past week, are already looking towards when they're going to be re-implementing quantitative easing. And gold responded, by just moving up. And also, that could then take the cork out of the bottle for energy prices, because if the world economy turns back around and starts to grow, oil will be in larger demand again. So we would look for a move up on oil. It's not at a buy point right here, but it definitely has reversed and moved into a nice little uptrend. And so then I'm going to talk about three stocks here. First, cyber. Cyber is one of those stocks that we were looking at. Now, there are several IBD stocks. So if you are a active trend trading member, you have access to our weekly update on the watch list. What we do with this is basically cyber broke out after earnings, broke out above this resistance area. So this was a good breakout trade, and then it just stopped, which is okay. And it did a really nice little 3-day pullback back to this level here on a half-hour chart, starts putting in a little bottom. TSI is bottoming here. And then we actually got into a trade down here where we sold a bull put spread. And we cleared some good dollars out of that, about $195 for the week on cyber. But I want to be keeping my eye on cyber because it continues to push higher. So this was not the best pullback to actually buy the stock, but we want to keep our eyeball on it. There are several other IBD stocks that are doing something similar. And so if you, like I said, if you get the our free newsletter, that will give you access to the watch list that I pull together on a weekly basis. The other one is Netflix. If you don't want to trade, the FANG stocks are still doing great. I mean, Netflix, Amazon. The thing I like about trading these particular stocks is just one very simple thing. They move a lot. They're the BDMs or the BWMs. That's big daily movers. $5 to $10 on a daily basis, 15 or $5+ on a weekly basis. And so as you can see here, looking at Netflix, and I want to highlight this to everybody, is one, Netflix this week, because there is Tuesday this week started here. has run from 350, actually from 354 up to 366. That's a $12 move. Well, if you like to trade options and know how to do that, or even if you just like to trade the stock, trade the stock, you can buy in at, down here because it isn't an uptrend, and just ride it back up to the top of the channel. Look what's happening over here on the daily chart. This tells you it is in a very strong uptrend because it's very much respecting both the 20-period moving average and the 8-day moving average over the last almost 2 weeks. Once it got back above the 8-day here, every time it came back down intraday and touched the 8, it rebounded. It rebounded. So I'm in the process of setting up a trade for the premium members where we will be buying and selling, or we will basically be selling premium on Netflix to generate weekly income. And we actually just opened a trade today on that, which I won't go into, because this is the free session, but it is, the anticipation is for price action to pull right back down. And the other reason I like it is I can sell I can sell an option in these strike prices here. In other words, if I expect to go from 366 down to 356, I can look at, hey, I could sell something like the 365 or I could sell the 360 call and buy the 365 call, so I'd have a nice wide open spread there. So it's an excellent way, and one of the ways that we are really promoting with our premium members on the strategy number 2. The other one I'm keeping an eye on, guys, is Tesla, of course. Tesla is going to do one of two things for us. As you see, Tesla is starting to move back down. It is another one of those. Watch Tesla. It's kind of in no man's land right now. It may blow out the bottom here, below the 290. And if it does that, watch for it to go all the way to 280. Also, on the flip side of that, it's in a downtrend. Okay, note, Netflix in an uptrend, Tesla in a downtrend. When it gets back up into the 820 combo moving averages or these trend lines, that made great opportunities over the past couple of weeks to get into a position on Tesla to the downside. So we'll be keeping our eyeball on that. Anyway, hey, that's what I wanted to cover with everybody today. I'll finish up the chart. I'll finish up the rest of the story. And so, which basically is, strategy 2, that what we work on with the premium members is about compounding. And the presentation I did on Wednesday night for premium members, we were talking about maybe we should look at trying to compound our returns with strategy number 2, keeping it simple. And so I said, what the heck? I'm gonna go for it. Okay. Now the compounding effect that I'm looking at is I started out strategy 2 with $10,000. The compounding effect that I want to go for is 5% per week. Now, since we're already into the year, here's how I've done with, so far, year to date. The first 3 weeks of the year, we were getting everything wired up for everybody to start trading, getting some of our positions in place. But then here's what we've done weekly, starting in week 4 down to week 8. So our current return up to this point is 21%. However, if I'm working with a 5% compounding, my return should have been up closer to 47%. So what I want to do from here on out is I want to shoot for this 5% return on a weekly basis to start filling in the gaps here going down. I'm going to track it. I'm going to provide you data on it to show you how I'm doing. And that way for, premium members, hopefully you will trade, well, not hopefully, if you want to, you can trade along with us. But I just got to looking at the data and I said, okay, gosh, darn it, strategy 2 is up 20% for the year. So, the old adage of if this is working for us, hey, let's do more of what's working. And so that's where I dropped off on, that's where I got off on that. So, hey, NASDAQ, and here's what I wanted to show you on this chart just briefly. Hey, we're in this January, February, March timeframe. NASDAQ tends to be a little bit weak, and then in April starts to take off and run through the end of the year. NASDAQ has been, all the indexes have been stronger this January, February timeframe. We'll see if we get a pause here in March and then get the 401k tax buying in that time there. Hey, looking for future events. March 2nd, we'll do the monthly BAM meeting. It is the webinar feature. If you need it, email me for anything. You can catch me at this email. And then, of course, premium training Wednesday night for premium members. And we just concluded all of our basic training. So we're ready to rock and roll going into the year. And so for the active trend trading team, thanks for joining us today. And one last thing, hey, Friday webinar special. If you are not a premium member and would like to try out our premium membership, you can basically, by attending this webinar, you can get this for a 40% savings, or rather than $124.99 per month, it's $74.99. Or you can try it out for a quarter for $199. Here's the link. Here's the password. Case sensitive. And so, hey, until we next weekend, I just want to say, hey, God bless everybody. I really appreciate you joining us. Keep growing the egg. Trade wisely. Trade profitably. If you're a premium member, we'll be jumping on the final hour at the top of the hour. And so, until next week, aloha. Trade well, prosper, and have a great weekend. God bless everybody. Aloha.